just to thank you for recording, Crystal. Just to do the full introduction, we're here today to talk a little bit about advanced markets and FIF resets. Now, those of you who have been here for a while probably have heard this ad nauseum. But one of the things that Paige and I realize is that the messaging from corporate about these FIF resets, what they do, how to utilize them, and how they can impact your business is not always as clear as we would like it to be. And a lot of people end up confused. And what do we do when we're confused? We run the other direction, right? So what we wanted to do is bring on a true expert, the advanced markets guru of the Ziller organization, Miss Norma Backe, to talk to you guys a little bit, not only about how to do the FIF reset, but why, and what that opens up to you as an agent, what that can do for your income, and what it can do for your agency as you continue to grow down the road. So Norma, welcome. Thank you so much for being here.
Thank you. Well, I'm happy to be here. And you tell me how you'd like for me to proceed. Do you want me to just take the bull by the horns and take it all the way through, or?
Well, what I wanted to do is start with a little quick Q&A with you guys. And if you have notepad, writing utensil in hand, that would be a very good thing to have today. But if we can, I just had a couple of questions that I wanted to kind of set up the what and why before we start talking about the how. Does that work for you?
However you like, absolutely.
Beautiful, beautiful. Well, first thing is, what are these advanced markets? What are these primary advanced market products that we're actually talking about when we're looking at doing an FIF reset? And a follow-up to that, how are they different from what most of us write doing mortgage protection or lighthouse leads, something like that, day in and day out?
All right. Essentially, well, let me start with what the different categories are. The different categories for resets include our debt-free life program, infinite banking, IULs, index universal life. I think everybody's familiar with that term, and the annuities, as well as QFA. QFA, very misunderstood. So would you like for me to kind of go into each one of those, Hunter?
Yeah, if we just maybe do a brief synopsis. Like I said, I think most of us understand IULs pretty well, but maybe just talk briefly about what infinite banking is, what DFL is, and kind of what the purpose of these are versus doing a general like term life insurance policy.
Absolutely. Well, maybe the best one to start with is our debt-free life program, because it is specific to symmetry. And this is a program that was created for symmetry. And what this is a program that helps people to pay off their debts in an incredibly shorter time than they're scheduled to pay off their debts. And it's using our exclusive debt-free life software, and that sits on top of an infinite banking product. So the software, you don't earn any money on that, but the infinite banking concept, which is a whole life policy, that is going to be, the product that we're working with there. The debt-free life program, I'll tell you, this has just been amazing for so many people. What we're typically looking for, people that are really genuinely trying to get their debts paid off. They're making overpayments on some of their payments. And we're usually looking for somebody who has mortgage debt plus 2 or 3 pieces of consumer debt. If they don't have a mortgage, then we're looking for at least 3 pieces of consumer debt to allow the program to work at its best capacity. Let me just open it up. If anybody has questions specific to that, or if I haven't been clear in some of that, just you can put them in the chat, or I've got the chat open so I can take a look at that, or you can just put your hand up. So since I've referenced the infinite banking concept, I'm going to go ahead and talk just a little bit about that as well. And this is not something that you're necessarily going to qualify somebody for, But when I'm usually getting resets for an infinite banking, it's because somebody has said, I want to do infinite banking. They've said that to one of you. They've heard something about it. They've seen something on TikTok or Instagram or wherever, and it's just not enough information. And so if that happens, then you are going to want to reset that to a subject matter expert. The infinite banking concept is essentially an overfunded whole life policy. It's a participating whole life policy with a mutual company. And it's overfunded so that it can be utilized like your own bank. You can borrow from it, you could pay yourself back. So you become your own finance company, essentially. You take control of the banking function in your life with the infinite banking concept. And I'm sure there are a lot more questions on that, but that's just kind of an overview of that. Index universal life, most of you, again, I think this is a fairly widespread one. Most of you understand that pretty well. But that is a policy, a universal life policy that has a side cash account that is actually linked to a market index. It can grow with the stock market with an index growth, but the client cannot lose any money in that. And so this might be utilized for tax-free retirement income down the road. It might be utilized, it's real popular for saving college money for your kids because you can start that when they're quite young. Then we have, of course, the annuity in a retirement section. And typically what we are looking for here is somebody who is concerned about market losses to their retirement accounts, because we offer fixed and fixed indexed annuities that can give them guaranteed lifetime income or simply allow them to continue to grow their retirement accounts without fearing that they will lose money in those market drops like we had last week, right? One thing I really do want to talk about, because a lot of people misunderstand this particular reset, and that is QFA. There's not a whole lot of explanation given to this, but this is Quility Financial Advisors. This is actually a department of Quility that works with people's retirement funds. And so this would be for people that are under 59 and a half and do not have an option of moving their retirement account for where they are, but they're concerned about the way it's being managed. And so Quility Financial Advisors can actually, in many cases, get into that account and be able to manage it rather than the current manager. Now, as far as details on that, I am not the one to give that to you because they're their own specific department. They are securities licensed. They are fully licensed financial planners, but that allows you to continue a relationship with these folks. You don't get paid for this unless you're securities licensed. But then down the road, when somebody is able to then roll that out into an annuity product, then you will get a split from Quility Financial Advisors. So those are the 5 areas of the FIF resets and kind of what you'd be looking for, what they're all about. Question?
So yeah, and so just to kind of highlight something that Norma said there, right? People with debt, people who have retirement are concerned about it, people who don't have retirement. Those are the 3 kind of target markets. Now, think about the people you know in your life, right? Do you know anybody that doesn't fall into one of those 3 categories? Having debt, not having retirement, or not having enough retirement? Raise your hand if you know somebody who doesn't fit into any of those categories, does not fit into any of those categories. Right? So what this is, and what Norma just explained so well, this is a tool that basically gives you the opportunity in the right situation to never have a no sale, right? because everybody has a need potentially for one or more of these products, in addition to simplified issue life insurance to cover their home and things like that. So Norma, kind of along that line, you talked a little bit about with the DFL and specifically looking for people who are making overpayments, who have, at least a mortgage and three pieces of consumer debt. What would you say from both a financial side and a health side are good triggers to listen to, or things that make a client a good candidate for one of these products?
As you're going through the financial fire drill and they're giving you, they're telling you how much they're paying on different things in their lives, you want to ask them, now, are you, just curious, are you making any overpayments to try to get ahead of those? And when they say that, you do want to know if they're regularly making overpayments, because if it's something they just every once in a while throw money at, that's not necessarily money we can focus on for building the plan. And with debt-free life, we want, if we're able, we want to be able to work just with those overpayments. We don't want to create a new bill for anybody. So we are looking for the overpayments. I will say though, I'll qualify that, because sometimes people are not making overpayments, but they will still qualify for the debt-free life because they have what we call lazy money. They have money that's going to other areas that could help them to get those debts paid off. And the question you really want to ask those folks, and you don't ask this until after you've made your sale or your no sale, is, let me just ask you, if your debts were paid off, would it be easier for you to contribute more toward retirement or save more toward retirement? And another good question is, would retirement be more comfortable for you if you had all of your debts paid off? And if somebody is intentional about getting their debts paid off, or they seem to be concerned with one or other of the other of those areas, go ahead and reset that person, because once they see what this program can do, don't talk too much about, you could say we have a debt-free life program. There's verbiage in there for you. You just have to read it, and just get them interested in that. Then your subject matter expert is going to talk to them about their situation, help them to find that lazy money that can help them reduce the payments on those from maybe they're set to get everything paid off in 27 years, and all of a sudden they can get that done in 6 years. I've seen that happen easily. And we're even including mortgages in that. It's amazing what this program can do.
Yeah, no, absolutely. And again, listen to the verbiage that she used there. Would retirement be easier for you if all of your debts were paid off? Would you be able to save more for retirement if all your debts were paid off? I swear, if anybody says no to that, I'll pay Tom that $100 he was asking for earlier. every time you get a no to those questions, I'll give Tom $100. Because nobody's going to say no to that. Nobody's going to say no. Actually, retirement's easier for me if I have debt to pay off. Right? We know that. We know the concern in this country right now is that given the current state of interest rates, given the current state of the tax debt or the national debt and tax revenue that we have, that retirement is uncomfortable for a lot of people who have worked 40, 50 years and saved for it and still can't make ends meet, right? So again, here's language that you can use to kind of suss out maybe somebody who's a little reticent about, just straight life insurance, but now you have access to all of these other products. And at this point, Norma, I want to ask you this. When in the sales process, right? We don't want to suggest this, right, until after we've made the sale, but when in the sales process should we be utilizing that FIF reset and gathering this information?
Right when you're going to the financial, the fact finder part of your presentation, when you're telling them basically, you got their health information and you're saying, we we not only have to qualify you health-wise, we do need to qualify you on a financial basis. So for one thing, and I love the I love that that verbiage that says, you know, ethically I don't want to underinsure you, but legally I'm not allowed to overinsure you either. So that's when you're going to go and find out those other things, those other places where they have money, also what their budget is. And as you're going through their budget, you're going, you know, that's where you're going to find if they're making overpayments to those debts they have. Maybe they've got a mortgage and a couple of car payments and a couple of personal loans or whatever. That's where you really want to ask those questions. You know, so are you making any overpayments here to help out with this? Just wondering, are some of them going to be gone, you know? And this is also where you're going to ask about those retirement accounts. So what do you have in place that would help your family if you were to pass away to cover these bills we just talked about? And so that's where you're going to uncover those retirement accounts, investment accounts, savings accounts, other life insurance. So this is where you're going to uncover those things that will then lead you to that conversation or those questions about debt-free life, or about annuities, or about IUL.
No, that's awesome. That's awesome. And we kind of touched on this earlier. You mentioned, you know, the with the IUL, that you can't lose, you can make money, but you can't lose money. But could you speak to for just a minute about the advantages of an IUL or a participating whole life over, say, a traditional 401k, IRA, Roth IRA, and what kind of that looks like for anybody who's maybe not familiar with the distinctions there?
Oh my, and I will say,
Is that a how long do I how long
yeah,
do
let me
I have kind of
see.
question?
Yeah, and to be perfectly honest, although I am SME with an IUL, and I know about IULs, I really think you've got a guy in house that is such an expert on that, and that's Josh. And but I can speak very well to the infinite banking, and I'm going to speak to that as far as infinite banking vis-a-vis your 401k or your IRA account. There are so many advantages to these products with the infinite banking concept. If it's properly set up, you have an account that you fund with after-tax dollars. It's kind of like a Roth IRA on steroids. And you could say the same thing about the IUL. So you fund it with those after-tax dollars, but that should be the last time you pay taxes on that money and on the growth of that money. So inside these accounts, they are growing tax deferred. They are growing with uninterrupted compounding, which is so amazing. Albert Einstein called compounding the eighth wonder of the world. So when you've got uninterrupted compounding on money that has guaranteed growth on it. And with the guaranteed growth, I'm talking about the infinite banking concept. So you do have guaranteed growth in that account. Then down, if they want to start taking money from that account for retirement, they can access that income tax free. But unlike a Roth IRA, this account has no limitation on how much you're allowed to put in each year. You don't have to have earned income to fund this account. You can fund this account however you want, or however you're able. So quite different from a 401k plan in those advantages. And I'll tell you what, some people have their heads in the sand and think the taxes are not going to go up. We know what the national debt looks like, and it's horrible, and taxes have to go up. So that's going to take a big bite out of a lot of people's retirement income. And to have at least a portion of their income for retirement coming to them in income tax free money, that's going to be very, very valuable down the road.
Yeah, no, that's a great kind of compare and contrast there. And just one quick question, because you mentioned the number 59 and a half earlier. Remind me, how old do you have to be able to take a withdrawal from one of these policies without paying a penalty?
Who were you asking?
I was asking you.
Oh, you were
Do,
asking me.
yeah,
Well, actually, I will tell you with the infinite banking concept, you never want to take a withdrawal from it. You're going to borrow against
borrow.
it.
Yeah,
Yes, you actually don't ever want to take the money out of there. You can access your funds at any age.
at
Yes,
any
you
age.
don't have those restrictions that you have on those other retirement accounts. And here's the really cool thing. If you find an investment opportunity where you know this investment is going to lead to passive income for you, well, if you have $500,000 in your 401k plan, you might be able to borrow 50,000 from it, but that's money that's not going to be earning anymore when you borrowed it from that account. And so you can borrow that. But what if you have an account with $500,000 in it and your opportunity is $100,000 and you've vetted this, you've done all your due diligence, and this is what you want to get into? Well, if you have that money in an infinite banking policy, you can simply borrow against that policy and go get that. I don't care if you're 24 years old or if you're 78. I mean, you can take that money and use it. And then you can be paying yourself back with the income that comes from that income producing asset that you've just purchased. This is a great way to become financially free using that money while it's still growing, and then have it available to you for retirement income, although you're probably setting it up with that passive income. So yeah, you can access it at any time, and you do not have a surrender period in the whole life policy. Now you do have a surrender period with an IUL. So just understand that you wouldn't be able to access all of your money. It's actually up to 90% in the infinite banking contract.
Perfect, perfect. And we've got a question here from Sherry in the chat that I think kind of speaks really well to what you're talking about. So she says, so the money is tax free due to borrowing only. If you withdraw from that, anything over what you invested, would that be taxable?
That's an excellent question. And again, I believe that all of the rules are the very same for the IUL, but I know that with the whole life policy, many times when people get to the age where they don't necessarily want to be borrowing until they have to borrow, let's say they've set it up for retirement, yes, Sherry, they can take withdrawals to basis because any of that is simply a return of premium. But then, if you've had this for a good long time, which you really should, if you ever set one of these things up, do your best to keep it the rest of your life. But when you get to that point where it is then where you've gotten a return of all of your premium and dividends, then at that point you would begin to take policy loans. Excellent question.
Very good, very good. Yeah, and to that point as well, when right, Norma, when you hit that kind of retirement age and you want to start taking those policy loans, you're not technically obligated to pay those back. Correct?
That is true. However, I would say that if you take out an infinite banking policy, if you take out that whole life policy and you want to use it as your bank, then think like a business owner. Think like a business owner. If you begin to take a lot of loans and you do not have a plan for paying those back, you will collapse your bank. Back in the day, there was a place called Midland National Bank in Midland, Texas, and it began the banking crisis that happened from many companies that had lent money to their stockholders, to their officers, that were non-performing loans, and it collapsed their bank. If you take too many loans, then the interest will simply capitalize within your system, and it will simply collapse. This is a beautiful thing that can be used for your entire life. It is leveraged. Your money is. Oh, I'm going to get on my shtick about IBC. This is my bailiwick. But your money is protected in there. Your money is insured better than any bank can insure it. It is protected against lawsuits and creditors and bankruptcies in most states. It's just such a beautiful product. And your death benefit is always going to be greater than the cash value that you have in there. So if you pass away and you have loans against the policy, then that is simply going to be deducted from your death benefit. The remainder is going to go to your beneficiaries income tax free. You know that from being in life insurance. Any life insurance contract is going to pay that death benefit income tax free. So yeah, no, you don't have to pay the loans back, but you should.
You want to. Yeah.
You want to.
You touched on another highlight of these that I think most of us probably learned in pre-licensing and then quickly forgot. But you talked about bankruptcies and lawsuits and this being protected. Another thing, and correct me if I'm wrong here, Norma, but I think we just talked about this the other day. It's also protected for anybody with young kids, protected from disclosures on FAFSA forms. So you don't have to list that as an asset, correct? When applying for financial aid.
Inside a life insurance contract, those funds actually they're not visible to anybody else, but you're not required to put that cash value inside either an IUL or a whole life policy. You're not required to put that on those financial aid forms. Now, some schools have their, because I spent a long time in college funding, but some schools have their own forms and they will ask about that type of thing. But honestly, this is money that does not get reported anyplace. It's between you and the life insurance company. It's like a Swiss bank. I mean, or at least like most of them used to be. It doesn't get reported. Doesn't get reported to the IRS. Doesn't get reported to any credit agencies. Yeah, it's very, very well protected.
Awesome. Well, Norma, we've taken quite a bit of time, but would you be willing to, and I asked Crystal to make you co-host, would you be willing to just 5 minutes here walk us through what the FIF form looks like?
Yes, I would love to do that. Yeah.
As we kind of wrap up here.
Yeah, and if you like, I've actually got that screen pulled up on my computer. If Beautiful. You want to just let me share my screen. Hang on, I got to get back to this one. And I am going to clear all the crap off of my homepage. Hang on here. And I am going to
come on, Norma. Here. Come on. You knew you're going to be asked for that. Come on.
All right, hang on here. Here we go. So I'm going to share my screen here, and it is really very important for me to walk you through this first part because it has changed completely. So I did a training video on this, told everybody where to find this form, and last week they changed it. Hang on here, let me get this off of my screen.
Isn't that how technology works?
Oh my gosh, they did a revamp, and so now you have to go into sales tools here. And in sales tools, here you go, FIF and resets. And then that is going to take you to the FIF. So they've even put a new wrinkle in since last week. That's a 2-step now. All right, so once you get in here, you're gonna, and I always put my poor husband in here, you're going to just start typing the name of your lead in there. And if it's an opt, it's going to populate in here. Now, if it's an outside referral, then you're going to just hang on here. I gotta be able to see my whole thing. There's a place where you can actually just type in their name, and when you add that referral and type their information in there. So then you're going to go down and you'll have the opportunity to put all your different information in here. I've already put a bunch of stuff in here as you go through your financial fire drill, and I'm not going to go through that. But after you've done all of that, you can do one of two things. Now you may have, and you always want to click save, you may have a couple of ideas about this client, but if you go down here and you see client has overpayment, well, that's going to be a trigger. And so you can click process results. And when you click process results, because the client is overpaying, it's going to bring these questions up for you. Do you feel like your debt is preventing you from contributing to retirement? Yeah, for sure. Okay. And then you'll have this that comes up. It's so wonderful. All you have to do is read it. We have an entire division based solely on education around debt elimination and our debt-free life program. And these folks are subject matter experts, and they can give you the education. You can do with it whatever you want. But I know you're going to be happy with what you hear. And they've helped so many of my clients. Folks, I don't care if this is your first week in life insurance. If you see this on here, you just go ahead and read it. They have helped so many of my clients. You want to edify these people. You want your client to want to meet this person and meet with this person. So you go ahead and just read this. And then, so let's see if we can get you on their calendar, okay? And then on mine, look here, I'm the only one on there. So then you're going to click on that link. In yours, you'll have other people in there. You'll have folks you can choose from, and you choose your subject matter expert and click on that link. And you know what? This is my switchboard link. I will tell you, this is happening to me now. So let me go back. Unfortunately, hang on here. Yeah, usually it's going to bring up my calendar. And I'm sorry it's not doing that here, but I know they have some kind of a problem getting to my switchboard links. So typically it's going to bring up the calendar for the subject matter expert. You are going to choose a day and a time that work not only for your client, but for you. Because if you're resetting them, you need to be on that call as well. Don't just throw them out there. You want to be on that call as well. This is your client, whether you've written something with them or not. You're the one who has established that relationship. So you're going to find that date. You're going to set that appointment. When it asks for your information, you put the client's information in there. Okay, put the client's information in there, and then it will guide you back to this page, and you will confirm. You'll click. It won't guide you back. I'm sorry. You'll have to go back to this page, because when you click that calendar, it's actually going to take you into a different window. So you're not done when you simply set that appointment. You have to come back to your FIF page and confirm that you have set that appointment. You'll get a little message that says your appointment has been confirmed. Now, the other option here, hang on. Let me see if I can just get myself back to the other page. So the other option that you have is you can also do an easy reset. So maybe you're not exactly sure and you just want to do this, or you can do this even, I hate to say it, without filling out all of the financial information. You can just go here. And here you have your 5 options, your DFL, IBC, IUL, QFA, and annuity. And you simply click on one of those to get to that calendar. All right. And do try to get to the right calendar. I have had people set with DFL when they weren't sure if the person wanted IBC, but there are preset things that populate in those confirmations. So it can confuse a client if you do that. So basically that is the drill. Once you click that confirm button, then that information, that FIF form, the information on that is going to get emailed to the subject matter expert. Now, the subject matter expert should be getting in touch with you. If you don't go through this process, then, and you just reset something to somebody, they may not know who you are. So then you also want to reach out to the subject matter expert so that they know who reset that person to them and what it's all about. So was that helpful?
Amazingly so. And if you would, Norma, could we scroll up to the financial fire drill just really quick?
Oh yeah, I gotta. All right,
And
I'm gonna.
just wanted to point out, and this was one of the hardest things for for me at first, but if you look, this is going to go right in order with your presentation script, right? You're going to gather their mortgage information. You're going to gather their monthly expenses. So any appointment that you have, you could have this page open right there. And it's going to let you know as you're going through the script, you're already going through anyways, whether or not this person's a good candidate for a reset. So Quility really has done an amazing job making it easy for us to connect our clients with these SMEs, get that information over there, and potentially increase your income just by doing what you're already doing anyways, gathering this information.
It's a wonderful form. And I would suggest, if you haven't been in here, some people are like, well, I just like to write it on my pad of paper. Well, that's fine, as long as you go over here and put it in here. But if you're resetting, but important to know, there are these places, like on this one, I have clicked overpayment, and that's one of those triggers. So, but it is a wonderful form. You can add as many expenses as they have. And it's so easy to do this. You can say, and what else? That's all you need to say. And what else? And what else? Every time you put a new thing in there. And so when they've got the assets, all right, I got a 401k. All right. And are you currently contributing? They've got that question in there as well. All right. And what else? And what else? So it's a good prompt. It's a really good form to use. And if you haven't been in here, get in here and play with it. Just play with it. It makes it a whole lot easier.
Love it.
Awesome. Well, Norma, thank you so much for taking the time to explain, just all of this massive stuff to us. It's certainly been educational. I hope this touched a chord with a lot of you, and in that, this is something you can be doing on every appointment that you're on. Now, is every client you work with necessarily going to qualify for one of these? No, but it's an exercise that you can start practicing for when you find the ones who do. And
Absolutely.
as I can't remember who it was on Jamie Susie's team, but did one of these in her first week and ended up rolling $1.1 million of guys' retirement into an annuity and made $35,000, just her split of the commission on that.
And I will tell you, let me just leave you with this thought too. If you're not quite sure, you think they might be a good candidate for a reset, when in doubt, go ahead and reset them. Let your subject matter expert go figure that out, what they qualify for. My very first reset, I had some folks reset to me for debt-free life. And debt-free life was not the solution for those people, but annuities were the solution for those people. And that commission, it was a $20,000 commission that I split. Actually, it was more than that. It was a $30,000 commission that I split with the resetting agent, who gets 40% of that. Now that's not, earning $12,000 for doing this procedure that I just showed you on this FIF form. That's not a bad payday. And all you had to do was that little bit, because your subject matter expert is the one that's going to be doing all the work. And each and every one of these products requires a lot of work, a lot of tracking, some of them take a month and more before they actually issue. So that's another reason to do a reset. You might think you want to do these on your own, but even if you're able, you may want to have somebody else spend all that time on it. So when
Awesome.
in doubt, go ahead and reset.
Well, thank you so much, Norma, for taking the time to pour in. And guys, if Norma made an impact, please be sure to thank her in the chat there. But appreciate y'all being here. Have a great Monday and great rest of your week. We'll be seeing you on the national call on Wednesday.
Bye-bye.